Ladies and gentlemen, for the last 6 days on Bitcoin, we have been dropping from an all-time high of 124,000. For the last 5 days on my YouTube channel, I've taken a bearish approach to the Bitcoin short term, as clearly outlined here in the thumbnails and titles. But I've always remained, and I've always held the fact that $109,000 on Bitcoin is a critical level of support that Bitcoin must hold. We're now reaching the same region that support stems from right now as we speak. We're entering on Bitcoin a bounce zone, right, between 112,000 and 109,000. A bounce zone that is also being replicated on the Ethereum chart. Ethereum, just like Bitcoin, has dropped from very considerable highs, almost all-time highs, by the way. Ethereum was coming up to its all-time high, rejected from that vague region, and just like Bitcoin, has dropped into a bounce zone of its own. You can see a very clear critical resistance level previously on Bitcoin here in red, which is now being retested for support as we speak. So as Bitcoin and Ethereum enter their bounce zones, the question is, will they bounce? If they don't bounce, what do we do? If they do bounce, where do they bounce to? We'll look into a very big warning flag on the weekly chart RSI, which should be an avoidable issue there, but it is something we need to look at. We'll look into the global liquidity index, and we'll look into the broader 4-year cycle, which so far is not indicating that the top is in yet. The 4-year cycle says we keep running for a little bit more. But towards the end of this video, I will admit something, which is even though the 4-year cycle has been successful and trustworthy historically speaking, that doesn't mean we should just blindly trust it, because the big glaring issue with the 4-year cycle is that if the 4-year cycle is wrong and you've trusted it, you've probably ignored many range-bound breakdowns in the meantime, and by the time you realize it's wrong, you could be down a lot on your position. So I do encourage, even though I'm a proponent of the 4-year cycle, I do encourage reactions to range-bound price action, and that's a big distinction we're going to be making at the end of this video, so stick around for it. So we need to weigh all this evidence today and come with a game plan. I've always said that this market cycle specifically is more about reacting than predicting, and that holds true even in the conclusions of this video. Before we get into it, I'd quickly like to take a squiz at the Bitunix Exchange. A lot of people are struggling, especially people from the USA, to find exchanges that they can access without issue as regulatory processes are kind of ramping up in the crypto market. And the Bitunix Exchange is one of the only exchanges remaining that is globally accessible without KYC. You can sign up from anywhere in the world, no VPN required. You can use it from anywhere. You can use it with just an email address and a password. It's got all the functions and features you'd expect on a regular exchange, even cheaper than most major exchanges, and certainly cheaper with my referral link down below. If you sign up with my referral link down below, you'll get access to this exchange with a 15% trading fee discount. This exchange has never been hacked before, so it's very safe in comparison to other big exchanges, historically speaking. And you can use that link down below to sign up, get that discount, and help out the channel. Go ahead and do that if you're interested. Let's get into the content. So I posted a poll on my YouTube community page here, and about 78% of my audience, according to this poll, the numbers might be slightly different in reality, but the point is most of my audience thinks we are in a bull market correction. Very few people at this point are convinced that this is a bear market breakdown. And I think that's correct, right? I don't think we're in a bear market breakdown. I don't think we've seen the adequate evidence to believe that. And even if we're kind of ignoring the cycle, even if the cycle didn't exist, even if the 4-year cycle, which says we go upwards a little bit more, meant absolutely nothing and we didn't believe in it, from just a structural perspective, there's no reason to believe at this point that this is a breakdown yet. I'm taking the charts back to a very rudimentary analysis in this video just so people get a clear point of view of what's actually going on. If we draw 2 green lines, a band of support on Bitcoin between 109,000 and 112,000, we see Bitcoin's critical support band from a range-bound perspective. We do the same thing on Ethereum. We can draw 2 green lines on Ethereum between around 3,900 and 4,100. We see the equivalent Ethereum range-bound support band. We are coming upwards on a support retest of Ethereum's band of support and on Bitcoin's band of support. It would be silly for going into strategy to sell heavily into this support zone when you can simply wait to see if the support zone breaks and then react to the situation there. Now, I personally, and I publicized this a couple of days ago, sold some of my positions around here, around this mark. I wasn't actually in Bitcoin. I was in Ethereum mainly, around the $4,400 mark on Ethereum. I got out of some positions. I publicized that on this YouTube channel. Recently, I have reinvested into my Ethereum positions at around $4,150. And I did that because I had minimized my risk by around a $250 entry price difference. And I did that because I bought back on a position in which I thought and think still that the stop loss is very easy to identify. If I lose here, I will be losing a minuscule amount, and I'll know exactly where to sell given the fact we are on top of a critical support band. So it's a, I guess, planned risk, calculated risk. And the only reason I'm sharing what I've been doing, I don't usually do this on my YouTube channel, the only reason I'm doing that is to help illustrate the point. The point is, Bitcoin has critical bouncing zone at 109,000 or roughly in that region. That's where the volume profile starts to pick up. The exact same story can be told about Ethereum critical support at 3,900 to 4,100, where the volume profile starts to pick up as well. If we lose these green bands on Bitcoin and on Ethereum, the game slightly changes, but let's be clear about what that means. That doesn't mean that everything's over, it's a bear market, we run for the hills forever. In order for Bitcoin to be in a confirmed bear market, we would need to be breaking below something like the weekly chart Gaussian channel. And that would only occur if we drop below something like 85,000, right? That's very, very far away. It doesn't really help us if we're waiting for 85,000 in order to sell. We're waiting a very, very long period of time. So we need to be a bit more reactive to that. We need to use the cyclical context in a bit more of a strategic fashion. But let's be very clear here. I'm not saying 109,000 being lost equals the end of the bull market and the start of the bear market. I'm saying that 109,000 being lost, and the same with 3,900 on Ethereum, these levels being lost mark the beginning of an unfavorable short and medium term environment for a cyclical investor. That's what it marks, and hence it prompts a reaction. If these levels are lost, I would take a much more cautious stance on the market until there is adequate evidence for me to be doing anything otherwise. Because I see from a cyclical level, from a regular cyclical level, right, a cycle that would expect a top around October, from that perspective, there isn't really much reason to be seeing such a significant breakdown this close to that cyclical top in October. It wouldn't make a lot of sense to me. We wouldn't really have much time left. Now, here's the big risk. This is the big risk in my view. The big risk is we see a quick fake out, and that prompts people to basically just sell very low and then have to buy back very, very high. That's a risk. That's unavoidable. That's just simply what it is, right? You're not going to be able to have a perfect bulletproof strategy at a level like this, at a period of time like this. Sorry, that's just a risk people are going to have to accept and hope for the best. And obviously, keep an eye on the charts so they don't end up selling at 101,000 on a liquidation wick. If we are seeing deliberate moves in the market from a macro perspective, going below 109,000 on Bitcoin, going below 3,900 on Ethereum are not favorable positions anymore. These are not things you want to be holding through, in my personal opinion, until the evidence clears up and we start to see a flip back to the upside. Then we can reassess and then the market becomes favorable then again, of course. I just want to add one more note here. If we saw a drop below 109,000, given the fact that it wouldn't directly cause a bear market, right? A bear market would only be triggered much lower. What we could see is, and this is highly speculative, but I just want to bring it up just so I've covered all bases for the people who are really in tune with what's going on here. We could see an actual correction, right? An actual correction, but last month's. And then we could rise upwards in 2026 once more. And that would be an extension to the 4-year cycle, which would validate some theories that people have about rate cuts being delayed, about the global liquidity index spiking much later than it's usually spiked, only 8 months ago, as opposed to a year ago in 2021's case, and 18 months ago in 2016's case, right? These previous bull markets have been supported via spikes in global liquidity much earlier, cyclically speaking, than this bull market is being supported with. So there is a relatively interesting argument to be made from a macroeconomic perspective that the cycle is being delayed due to just macroeconomic factors not happening as swiftly as they've happened previously. However, that's entirely speculative. It's not actually based on anything concrete. Even though people think that, rate cuts are concrete, rate cuts, happening leads to market pumps. Actually not true at all. The entire market pump of 2017 and of 2021 occurred during, 2017 exclusively, occurred during active increase in interest rates. It's only 2021 that occurred while rate cuts were happening. And actually the run up to this cycle so far has been occurring in an environment where rates were very high. So, it's not necessarily as true as people think it is. There is a kind of apple of truth in there. a kernel of truth, as people say, but it's not like a one-to-one rates cutting equals market go upwards. It's not that simple, because there's also sentiment of market investors, and there's also perceived expectations of rate cuts, which actually do more than the rate cuts themselves in many circumstances, as we've seen by the fact that global liquidities only just started rising recently, while Bitcoin was already at all-time highs. But and this is why I don't bring it up often, because it just ends up into me throwing paragraphs of information at you and you being confused. But what I'm saying is, yes, there is a circumstance here in which we drop below 109,000 and we see an actual correction, and then we come upwards for a delayed top in 2026. It's not a circumstance I'm taking very seriously right now, because we haven't even lost $109,000 yet, and because the cycle has always been accurate, and until proven inaccurate, we're going to treat it as if it's accurate. The cycle says top in October. So my eyes are strictly, locked into 109,000, strictly locked into 3,900. And if we see a brief drop below those levels, that's not enough for me to be considering an actual breakdown. It had to be an actual drop, a clear drop. And by clear, I mean you won't be able to mistake it. That's when, in my view, reactions are very clearly prompted on a medium-term and short-term level from us, and that's when we can start seriously assessing a possibility that the cycle is changing. Although that's not a period of time in which we can say the cycle is gone and over. There are some threats developing. There is a threat here on the weekly chart RSI with the 62 level on the weekly chart RSI, which has previously, historically been a very, very interesting level in terms of identifying momentum shifts on a market-wide perspective. It is the origin of the weekly chart RSI price action. It doesn't just come from nowhere. It's literally where the weekly chart RSI started. And we've broken below this level again, although it is an unconfirmed break. We have 4 days left until that weekly candle closes. We can do a lot in 4 days. We're on a bounce zone right now. Ideally, in 4 days, we'd be out of here. So let's wait and see what happens, and wait a few more days and then assess this indicator a bit more closely. Currently, there's still plenty of time for this thing to change. There's no point, bringing this up too much and stressing people out for no reason. If we're looking for a bit of good news here, on the shorter term charts, it looks like we should see at least a local bounce across Bitcoin and on Ethereum. We see kind of descending wedges forming on Bitcoin. You can see it right there, clear descending wedge. On Ethereum, if we're looking at a shorter term perspective, let's go to the hourly chart, for example. Let me see what it is here. Probably some sort of wedge as well, maybe a channel formation. I'll draw it in just so we can get an idea of what this is. Maybe a descending, broadening wedge, something like that is forming as well. So on a local level, actually we are expecting short-term bounces. Whether or not they turn into actual proper macro bounces is kind of a different question. And it's a question that I'll be very interested to hear the answer to in the coming days of the market. But it looks like on a short-term perspective, we've got some strength here. We should see some relief. And hopefully that relief springs into an actual bounce and a proper continuation here. I've spoken about the threat many, many times. I still think, unfortunately, it's just still a thing for me. This 130K top is a very real consideration. We're still within this ascending logarithmic regression channel. We're still underneath that power law resistance line. If we see a 130K top around October, that wouldn't be unusual. That would be a regular cyclical top. And that's it's an unfortunate reality, because it complicates the situation a bit for us. Because can we go downwards first below 109 and then spike upwards quickly for 130K in October? It's like, yeah, technically we can. But for that to happen, it would be such a dilution. It would be such a, distortion of what we would consider to be a regular range-bound support structure that we should react to if it's lost. So it's a bit complicated, this situation, actually. We just have to play it as best we can and respect the cycle, but also remember to respect range-bound TA. Because at the end of the day, the problem with the 4-year cycle has always been it's impossible to know that the 4-year cycle is broken until it's actually broken. And by the time it's actually broken, you could be down a very significant amount in your investment. So it actually is in your favor to rely a little bit more on the range-bound TA than the cycle itself at times like this. Because the cycle says, as I said, we could actually go downwards and then just go upwards randomly and top out. And, that's what the cycle says. But, guess what? If the cycle's broken and we go downwards and you're still holding and then we keep going downwards, then you're trapped. So you have to react to these levels no matter what the cycle says. So we'll see how it goes, guys. We'll update you on the situation, of course. Tomorrow, I'll give you a short-term update, what happens with these channel formations on Ethereum and what happens with the wedge formation here on Bitcoin. And if we see the start of that bounce, hopefully we do. Thank you so much for watching. It's a pretty treacherous time. I feel like I'm sailor, commanding the ship here a little bit through some rough waters, and hopefully we can get through it unscathed. So let's see. Thanks for watching. Leave a like, comment, and subscribe, and check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.